All right, good afternoon, everyone. A big thank you to Mr. Kim and KCMI for inviting me here. And this is my third time in 18 months in Korea. And I have to say, I'm genuinely falling in love with this country because it is really remarkable what, in the short time that I've been coming back, what I see is happening in the whole impact investing, the social capital market space. So I see a real revolution that's happening here. So I'm really glad to be part of it. Before I start, I actually want to do something. Given that today we're talking about new capitalism, we're talking about social capital markets, we're talking about impact investing, I don't think we can actually use this angry image. So I think what I'm going to do, and I have a pencil here, I'm going to draw a heart here. So we actually have a bowl with a heart. And I drew it with a pencil, so you can choose to erase it if you want. But I would think for a lot of the things we're discussing today, once again, you can choose to erase it if you want, or you can keep it and see how this actually becomes a reality. So next time when I come, I actually see that thing drawn in a pen, and the fact that this is now the new symbol, and the bull is actually smiling. It's not so angry. So with that, let me just start off. And I think I always, when I'm giving a talk, I always sort of give you a little context because let's face it, I'm standing here in a sari, and people always have questions, so what is she going to tell us? Well, it really is, when I talk about social capital markets, I always say that this really is a journey in some ways, in a very personal level, of my own journey. And I am from Bangladesh, one of the poorest countries in the world, but shockingly and for me, it's a very proud thing that the country has been having 6% growth rate for the last 15 years. And it is due to, obviously, a good private sector that's coming up, but also a lot of the work that the NGOs have done. So from Bangladesh, where women are not highly regarded, I actually went to the US, got my education, and I started my career actually in Morgan Stanley in Wall Street. So this was 23 years ago. And what I did was, instead of staying on and making lots of money, which is nothing wrong with it, but I didn't want to do it, I actually took my knowledge and went back to Bangladesh and worked for a small bank which was giving loans to the rural women. And this was 20 years ago. And this was the bank later on which got a Nobel Prize called Grameen Bank. And what I did was I used my knowledge from Morgan Stanley to work on the big first financing round of Grameen and actually bring in a lot of the learning that I had from capital markets into the NGO space. So I think the reason I share this story is because that's frankly why all of us are here today, which is really seeing where we are in this whole ecosystem and the role we can play in creating this new ecosystem which has emerged. It's not emerging, it has emerged. And what we can do to make it grow even faster. So I think it's actually quite relevant. I think some of the speakers earlier on had talked about it, which is to first celebrate capital markets. The capital markets has given us enormous growth rate, all over the world. I think in 1900, the world economy was 1 trillion. And right now, it's about 90 trillion or above. And it is really remarkable. In a century, of course, you could say it's innovation, it's technology. But let's face it, it's actually also a big role was played by finance. You look at that in terms of the life expectancy. People are living longer. In the richer countries, they're living really long. I don't know if I want to live that long. And then also in the poorer countries, people have, of course, better access now to controlling diseases and eating better, et cetera. And in terms of also, if you look at the mobile access and the technology, it is astounding. And I always think of because my first company, which I started in 1990, it was an online marketplace. The internet penetration rate was 0.02%. And now the internet penetration rate worldwide is over 50%. And of course, in Korea, I believe it's 100%. And in terms of mobile phone, it's exactly the same. In 1990, it was 0.05. And now worldwide, it's now 78% penetration rate. So these are remarkable numbers. And this is, again, the reason I'm saying this is just to celebrate, the power of capital markets. And, oops, sorry, what am I doing? Okay. Now, all of this, of course, the smaller world, we're connected, et cetera, et cetera. And also, Asia as a whole has been a big benefactor of this, right? China now is the second largest economy in the world. And we see the fact that we have now vibrant economies. We actually have people who are getting richer in the region. we have a middle class, which is just really growing and thriving. China and India together now comprise of over 18% of the world GDP. We have actually now people from the middle class who are becoming richer. And the number of poor actually is decreasing if you look at it in a relative scale. And there are about now, I believe, 600 million people who have been lifted from poverty, which are all great numbers. But there's a but. There's still a lot of poverty in Asia. And again, my talk will be in context of Asia because that's where we operate. And the interesting thing to look at is actually the Gini coefficient. Again, going into the space of economics is a little bit, which really shows the inequality. And interestingly, if you look at the Gini coefficient of two countries that always comes into picture when you're talking about Asia, the two most populated countries, India and China, you can look at how the Gini coefficient has really increased. I mean, China even more so than India. And the Gini coefficient, what it shows is the inequality that persists in a country. And this is really not really good. I mean, in China, it was actually in the low 30s, went up to the 40s, and India, it was low 30s, went up to the high 30s. So these are all indication. The fact that, yes, we are becoming richer. In Asia alone now, we have 3.4 million high net worth individuals, and the definition of high net worth individual is someone with an asset of more than 100 million. So we have a lot of rich people in Asia. But also the reality is, in Asia, we have over 1 billion people who are living under $1.25 a day. Okay? So it really is the fact that this is astounding, that while all this fantastic thing is happening, capitalism has left a big group of people behind. And this is something that hopefully with what we are discussing today is what we are trying to eradicate. So, oops, I keep on pressing the wrong thing. Okay, so the key factors in why this inequality happened are, of course, we know these are the basic services that are dismal in all of the countries, the distribution of technology, infrastructure, etc. But also, as I feel, once again, coming from Bangladesh and having kind of gone through the system there, is really the intense lack of opportunity. And this is actually something really, really important. And if you look at the capital markets, it comes down to simply something as lack of opportunity to finance. Now, the social enterprises today, obviously we see it and we are working with it day in, day out in our companies. They are in every sector you can imagine. So we are working with social enterprises in water, health, clean energy, agriculture, etc. It really runs the gamut. And what we have done is, again, just for the sake of today's discussion, because in Korea, when you define social enterprises, you look at them a little differently, and I'll talk about it later, is for us, we actually work with mission-driven, for-profit, and market-driven, not-for-profit companies. So it really is, the legal entity is immaterial. What's material is what's in your mission, what's your purpose, and that's exactly what Jed was mentioning just a few seconds ago. And that is what drives us to work with these organizations, that their mission, they have to be doing social and environmental good. And the reality is, while there is actually a huge market of these social enterprises all across Asia, they actually are in some ways remained in small state because of the lack of capital. Yes, you can say there's lack of governance, they need to improve, etc. Yes, all of those are there for some of them, but really what it boils down to is lack of capital, and which means lack of capital also hinders their ability to have bigger impact. So in terms of social enterprises, and this is what drives us, the two companies that I run, is how to get greater access to capital for these organizations. So I won't spend too much time on it because everyone has talked about it and Jeff talked about it. So I think in terms of, you look at the traditional investment, how it works, you get a financial return, traditional grant, NGO, you get a social return, and with impact investment, obviously, you're getting all of it. And that's sort of the purpose of this, which is really looking at investment, looking at the social capital markets in terms of giving triple bottom line. This chart I love, and I think this is, actually it's my colleague who made it, who couldn't do PowerPoint, and I forced him to, and now this is like the best chart we have. This actually puts a lot of things in perspective, and this is not drawn to scale, because if you did draw it, you won't be able to put it in one slide. So take a look at the left side, okay? So that talks about the global capital markets, and if you look at the outermost circle, the blue one, that is the number which is for the global managed assets. Okay? And here it says it's 56 trillion. This number goes up and down, from 60 to about 100 trillion. So this is really all the managed assets. Okay? This is not wealth. It's just managed assets, what's in the stock exchanges. Now, let's go down a little bit more. Okay? Now you see here environment, social, and governance, this ESG. If you go on Bloomberg, now ESG, actually there are about 4,000 companies which are on Bloomberg, which actually post their ESG figures. And if you look at this number for ESG, it actually is quite interesting. There's right now, about $20 trillion worth of ESG companies which are traded, okay, in public exchanges. You go down further, you see SRI, now socially responsible investing. SRI was non-existent 15 years ago, it was zero, okay? And right now, in SRI, where basically it's negative screening, you see the number is about 7 trillion. So these are all very significant movement, as you can see, that's happening. Now, impact investing, there's a number of 1 trillion which JP Morgan wrote in the report that came out a couple of years. This number may be more or less, but that's what the industry likes to quote. So right now, they're saying this has a potential of being $1 trillion in a few years' time, which is really astounding. This really is a significant amount of money which the investors should be really getting excited about. Now, let's flip on the other side, which says philanthropy. And as you can see, we couldn't actually get the number. We just got the number for the US philanthropy, which is all very transparent. And we got the number which says in basically 2011, there were about $300 billion worth of philanthropy money that went in. That's just the US. And then the venture philanthropy is even smaller, which is about $50 billion. So if you look at it, the reason we put it like this is really, this is a stark comparison in terms of how much money is going in to take care of the social needs that are in the world, vis-a-vis how much market money is there just for pure financial return. So this is really astounding. So I think what this really puts in perspective is the fact that capital markets, with its power on the left side, can be doing so much more for the social good of the world. Now, in terms of the opportunity for social capital markets, it's tremendous. And what we mean about social capital markets, it's really bringing in all the players, who are actually participating in this market together. So we have obviously the social enterprises, we have the impact investors, and very importantly, we have the ecosystem players. And this is something that we emphasize tremendously, because without the ecosystem players, this system is not going to get off the ground. And what do we mean by this ecosystem players? It really is everyone who is playing a role in doing all of this. You have the people who are building the infrastructure, you have people who are doing the research and advocacy, and then you have basically the catalysts, who are actually putting their own money or their time, effort, however you do it, platforms, and actually making it happen. And interestingly, you see here, we put in names of various folks who are doing it all over Asia and beyond. And it really is a lot of people are coming into this space. And I believe if you do the same mapping for Korea, I think you'll see there's actually a lot that's happening here already, right? And it really is how to bring all of them together and recognize the fact that you all are creating this enormous social capital markets that needs to be created for the space to get off the ground. Now, I basically started two companies, one about 2.5 years ago, almost 3 years ago, and the other one about 2 years ago. So the first company, it's Impact Investment Exchange, we call it IAX for short, it really was with a mission to create a platform where the social enterprises can raise capital. And I always use an example. I said, IAX really started off with creating a stock exchange, and then we saw the need of actually doing a lot of research around it and actually finding out who the players are in the space, doing mapping in all the different countries. And that's where Sujog came in. Sujog is a Bengali word for opportunity. Now, I think back now in the last 3 years, and it is really remarkable because it reminds me in history, there was a king in the subcontinent in India whose name was Sher Shah. This is when the Mughal kings, and after that there was a period when this king took over from the Mughals. And he created a road. He was trying to fend off all the army. And he created a road starting from Afghanistan to what's Myanmar today. It's called the Great Trunk Road. So it goes through the entire subcontinent. And no one really remembers anything else that Sher Shah has done, all the wars that he had, etc. but everyone remembers that road that he had created to prepare for the war. So I almost feel like that's the case, that what we have done the last 3 years, we have been building the road for hopefully not war, but some peaceful thing to happen. But that's the result of this. So we started off thinking we're going to have this exchange, which hopefully will take shape by end of the year, and I'll talk a little bit about it, where we are. That's Impact Capital. And in the process of creating Impact Capital, we actually created 2 other platforms, which is up and running and where investments are being raised. And the platforms, as you can see, the first one is Impact Incubator, and as the name suggests, it actually is for seed stage social enterprises. And here we actually have a very strong partnership with a venture capital firm where tech-focused social enterprises are given funding from them, but also we bring in other investors. So that's the incubator, and our partner, Small World Group, incubates them. Then we have Impact Partners. Impact Partners operates and is regulated by Monetary Authority of Singapore. It is a private placement platform. So it really is a platform where investors are coming in, we have social enterprises, and then of course there's a matchmaking that happens. And Impact Partners right now has over 200 investors, and the criteria here is with the MAS regulation, we can only have accredited investors, so it means that we have high net worth individuals, we have family offices, we have foundations. So those are investors. And interestingly, I always feel perhaps we have reached a tipping point because every week now we have about 2 or 3 investors who are joining this platform. And we have basically social enterprises who we have spent the time and effort and done the due diligence and got them ready for investment. So right now on the platform, we have over about 14 social enterprises, and in the pipeline, we have about 90 who are getting ready to get on the platform. And then there is the famous Impact Capital, which used to be called Impact Exchange, but MAS said we can't call it that, so it's being called Impact Capital now. The way it's being created, we're doing it with a partner, and it actually, we have gone through a lot of iterations, enormous amount of regulation, and what we have come up with, which we're very excited, it actually works for everyone. It is going to be an exchange which will be actually open to retail, which is the entire platform is going to be just doing this. And again, we are using our partners' infrastructure. And the Impact Capital basically will have an ability for social enterprises to raise up to $5 million every year. And this is also where any person, you and I, can go in and invest in the security. We still are sorting out various issues regarding what can and can't be done on the exchange in terms of you can't really short the stock. We actually now have a whole set of rule book we had to write, so I learned all of these things, didn't know much about them, but this is really exciting because what we have done is really put piece by piece together and created this platform which will be hopefully up and running soon. So these are basically the 3 ways that social enterprise can raise capital from all over Asia when they come to us. And I hope with all the things I'm hearing that's happening in Korea, I hope I can work with you, and basically share some of the wisdom, because it has obviously not been very easy to get to where we are, and there's been a lot of learning. And in terms of also as we're doing it, what we realized that we are also pulled in to do a lot of financial advisory work, and I'll go into a little to detail about that because again, that shows how the space is growing. And then we're doing a lot of financial product structuring because once again, this is something which is quite needed in order to actually get participation from various players in the ecosystem and various types of impact investors. Shujog does 3 things, we like to say: action, advocacy, and research. And again, it started off with the whole work that, frankly, Jed started years ago, which was on the impact assessment side. And this is something that has been coming up over and over again for us. And we said, okay, we worked very closely with a number of parties in the US. We played a role in giving input in IRIS and GEARS and worked with them very closely. But we felt we need something more with an Asian context. So we actually have an impact assessment that is a little more tailored to Asia. And then we also do an incredible amount of research and mapping and understanding. So before we go into a country, we actually first go in with Shujog and actually learn about what the the social enterprise market is like, who are the players, what's the ecosystem. And one of the things we do very effectively, and this is very important for us, and it's been very, very helpful, is in all the countries we operate, now we have actually a group of ecosystem partners. So we have law firms, accounting firms, et cetera, who are working with us when an issuance happens. So, and we actually negotiate with them as being a part of this network. They give a lower rate for the social enterprises. So all in all, it actually is a win-win for everyone. For the ecosystem partners, they have a new revenue stream. For the social enterprises, they can raise capital in a cheaper way, because whatever's said and done, it actually is very expensive to raise capital. And for us, we want to see how we can make it cheaper and cheaper, for the social enterprises. So as you can see here with IX and Shujog, we feel that we have all these ecosystem partners around us that we use very effectively, and it has the capital requirements as it gets bigger and bigger. All of these players play a bigger role. Now, in terms of the financial products, and this is something, the request I got from the KCMI folks, that I should talk about some of the case studies, what we're doing. And this, again, will give a light on some of the things that are happening in Korea, and you can see how some of these are actually transferable or not. Because we are actually, all the things that you see here in catalyzing capital retail products, we're doing in the different countries. So let me very quickly go through them. Matching investment platform, we already talked about. That's what we do. For example, on Friday, we just closed another deal. This was an entity in the Philippines called Bagasphere. And they do basically vocational training for the youth and women to get them in the call centers, and they actually work outside in the remote parts of the Philippines. So we were very excited about that, and we had about 6 impact investors who came in for that deal. And it was actually a convertible debt. So I think it's very interesting. It was not a straight equity. It was actually convertible. And we're actually realizing, even doing convertible, for all of you who are in finance, it's actually a good way to sort of evaluate these companies, because you don't get into discussion of valuation and all that right away. So which is actually great and a quick way to do this, because for us, we actually wanted these to happen very quickly. So we're actually trying to find ways how to make them happen quickly. The other thing we are now embarking upon is guarantee fund. And what do we mean by that? It's actually not a fund, it's actually a facility. And we have found out that there are certain sectors, there are certain countries that investors will not go into. For example, we have some great social enterprises from Pakistan. I can't even get the rich Pakistanis to get into it, forget anyone else. So, similarly, there are certain sectors that people are just not willing to get into. They said, it's kind of risky, are we going to get the financial return, et cetera. So what that really told me is the fact that, oh God, you know what? We have to create a way to get people, investors, more into these entities. So why don't we create some sort of guarantee facility? So we are now working on this, where we're creating guarantee facility. We're working with a big bilateral agency, where we're actually looking at Indonesia as the first country where we'll do it, because Indonesia has a lot of impact investors. There's a lot of wealth there, and of course it has the greatest need. So we are actually creating this facility where any investment, if it's a debt instrument, basically this bilateral agency will guarantee a certain portion of it, and you can kind of buy the guarantee. So this is very exciting for us when this happens, and once again, a great idea for Korea if you want to stimulate some of this investment and bring investors in. The next is actually a fund. This is something that we have been asked many times, and interestingly by a lot of high net worth individuals who want to be in this space, but they don't have the time, or they don't have basically the office to kind of deal with small investments. So they have asked us, basically saying, why don't you do a fund? So we at last sort of said, okay, now we have a little bit of time to think about it. So we just started the work for a $50 million social investment fund, where most of the funding is going to come from DFIs. We already have commitment from a couple of them. And this is really to looking at investing in social enterprises who have a big focus on climate change. And again, we feel this is one of the biggest threats for Asia and for certain countries like Indonesia, like Bangladesh, and India. So we actually want to sort of make sure that as the social space is getting more interest, that we bring climate change as a part of that equation. Social impact bond, I will not talk about it because there are a lot of people talking about it, but the only thing I'll say is when we started talking about it, we were talking about it as a pure bond, not as it was done in UK, which is more like a fund. And the whole thought was actually to have the government kick in a form of guarantee to the investors. Because again, you have to keep in mind, one of the things that we have learned very painfully, Asian investors are very different. And Asian investors, to get them into this space, you have to have many different mechanisms, which you may not need elsewhere. So this is very pertinent for Asia and for Singapore. So this is how we were talking to them about it. We're actually looking at some, we've been pulled in to help in some health insurance. And again, I really don't like to call it a social impact bond, but again, that's kind of the lingo it's being used here, so that's why I used it, where we're getting it's actually a pure bond issuance, where basically the investors will buy the bond, and again, the results will be linked to that. The government actually does some guarantee. This is a buffer fund, similarly, for the health sector. We're doing this with BRAC in Bangladesh, and this is actually something really exciting, because in Bangladesh, again, there's really no healthcare insurance at all. So this is really for the poor, for catastrophic situations. If someone has cancer, someone had an accident. We are looking at, and what's really interesting, if you look at it, when we are structuring this, we're actually looking at stacking different types of capital together. So some of it actually will be grant that BRAC will get, but the rest of it will actually be some sort of a convertible, and then some of it will be actually bond issuance that will happen. So this is something that we're doing for BRAC. And then something that I didn't realize, we're working with 6 different NGOs who have come to us for various kind of bond issuance, where they have future commitments, but they need the money now. So it really is very much all the smell of actually a Gavi bond that happened, Jed. So it's very interesting, because they're coming to us and saying, can you figure out a way for us to get the capital now, because we need to actually expand. We feel this money is going to run out, and although they're committing, it may not happen. So we are actually now in the process of working with about 6 of them, as I mentioned, where we are creating some sort of a structure where the future flow of capital that these NGOs will have will act as some sort of a guarantee. So what you're seeing here, the examples I very quickly walked you through, is the fact that each one of these situations, we are actually just responding to the demand. We don't go out there and say, this is a service we have, will you please buy the service? People are coming to us, and we're saying, okay, how do we actually make this organization a participant in the social capital markets? And also similarly with the investors, how do we make them part of the whole social capital market space? So we are working all over Asia. Korea, we just started some conversation with some of the folks here who would love to do more. And our investors actually come, again, from all over, but 80% of them from Asia. State of social capital markets in Korea, once again, everyone have talked about it, so I will really not spend much time, but the only thing I'll say is the fact that the space is growing, that's very exciting, but I think one limiting factor is that you're only looking at not-for-profits, and I think that's something that is quite limiting for Korea, and I think this is something that needs to be addressed, I think, if this space is going to grow. And I think of course, it's very nice to see that the social enterprises are growing here, again, with the definition that's used and how it's registered. But interestingly, I believe when I looked at the numbers, the largest, I think SK Group is the one who has the largest number of social enterprises that they have registered. So I think, once again, this shows there's some flaws in the system, because this has to be something that's being done by individuals, not by corporations who are actually just churning out these entities. In terms of opportunities for Korea, I just think, again, it's an enormous opportunity, and I think everyone has sort of touched on it, and in terms of measurement, et cetera, but I think what I'm going to say is really that fact, all the pieces that are happening, now pulling it together in some form of infrastructure, for this space to grow. And I think really responding, to how to make the space grow really at a ground level, to actually the participants, as an investor on top. And I think, as I said even last time when I was here, is the fact that, Korea, I think the place it's at, and I say this to Singapore as well, it's one of the 4 Asian tigers, is you have shown the world how quick it grew and how fantastically you have done. And I think in terms of looking at being a participant in this space, obviously you should look at yourself first, what you can do in Korea, but you actually have a responsibility to actually play a role outside Korea as well. which is not happening yet. So I think that's something, that's my request. And hopefully next time I come, there'll be a heart over there. And there will be, of course, more participation from Korea in creating the social capital markets in Asia. Thank you.
Thank you, Ms. Shanez. If you could remain on the stage. We next have comments. A little bit late. I think you had 3 questions, but perhaps if you could answer maybe just one of the questions, which is how do we go about setting up a social stock exchange? We'll get a brief response and end this presentation.
Okay. You know, for us, we first said, why do we want to create a stock exchange? And I think there were actually, of course, 2 reasons: from the social enterprises to be able to raise capital, and then from the investor side that they actually have liquidity. So if they invest, they can actually come out of the investment if they don't agree with how the organization is growing. So I think keeping that in mind, we actually did an extensive study of the exchanges and how much it costs for any organizations to be listed. And from all the exchanges that we studied, it seemed the average price was almost 19%, 19, of the capital raised, meaning if they actually raised $100 million, they almost spend $19 million on that, on legal bill and the accounting bill, creating the prospectus, etc. So what that really showed immediately is there's actually a flaw in the system. Even if you have an exchange, no one's going to come to it if they have to spend so much money to get listed to raise money. So I think that was sort of one of the big learnings for us, and we realized that one of the people we need to get to work with us was really the people who were creating all these bills, which were the law firms, which were the investment banks, and which were the accountants. So we started reaching out to them and saying, okay, will you actually participate in this platform? And what kind of service can you give? And we really started sort of pulling on their CSR string and saying, can this be really a true CSR? Because as we know, CSR, the way it's practiced, is not how it's defined. So interestingly, we had the most traction with the law firms. So we actually have a lot of law firms who are working with us now. And the next thing was, okay, for us to actually, the other reason this is so expensive to be listed on an exchange is actually the regulations around it, because you need a full-fledged prospectus. You actually need to follow all these regulations set by the Monetary Authority of Singapore, as we have it, or SEC in the US, etc. So then we started working on what kind of platform can we create which will bring the regulations down. So after going back and forth, now the platform we have, we are going to launch, it actually has a lot less regulation. And the reason it has less regulation is the capital raise is smaller. And then also the fact that the partners that we have is going to be the market maker. So all of these things, we actually don't have the nominated advisors. We actually kind of got rid of that. But we actually have these ecosystem partners who can play a role in getting the organization ready. So I think for us, it really was taking a very much a research approach of how it was being done and how we can make it happen so that it actually makes it attractive for the social enterprises. Now, having said all that, I have to be very clear that although we are located in Singapore, it actually is a regional exchange. So we can have organizations from Korea as well. And actually, this is a challenge I want to put in front of you, which is if the Korean organizations are what they're saying they're doing, why don't you put it on our platform? Why don't you put it on our platform and actually see if they can raise the capital? I want to see how the Korean social enterprises will do vis-a-vis the other social enterprises coming from India, coming from Indonesia, coming from China. I want to see a social enterprise from Korea on our platform. And also the same way, I want to see the investors from Korea. We don't have any Korean investors on our platform. I want to see Korean investors who actually are coming and participating. So for me, the big thing is, sorry, I'm too much of an entrepreneur. So this is all wonderful, all this discussion. But end of the day, for me to make this trip worthwhile, I want to see some action, right? So, and I think maybe there comes a point when we actually have to do something. And maybe now is the time. You don't even need to create a platform. Just there is one. Join it. You don't need to have investors to think about it. Join it. And this is the time for us to do something. Thank you.
Thank you very much, Ms. Shanez and Professor An. This concludes this presentation.